Well, it was a historic moment in Ottawa this morning as King Charles delivered the new Liberal government's throne speech, kicking off a new session of Parliament. And among the policy priorities laid out is Prime Minister Carney's goal to turn Canada into an energy superpower. Joining us now to discuss what this means for Canada's natural resource sector is Andrew Yastreb. He's Vice President for Portfolio Research with TD Asset Management. Andrew, thanks for joining us again.
Thank you for having me.
All right, so we have a new government in Canada and potentially a new approach to natural resources. What are some of the things that you're seeing?
So it was interesting last week when on Tuesday the MPs were sworn in and took the oath, and then the new Minister of Energy in the new government on Thursday went to Calgary and made a speech to basically to the energy industry and insiders there. And if you listen to the messages in that speech, I think it was all very constructive and very pragmatic. And I think the message there is that the new minister is very familiar with the industry. He was he lived in the prairies in the past. He has deep roots in the family in the regions, so he understands how important natural resources, oil and gas, and mining is to the region. B is that he also has exposure as a businessman to this space because he was on the board of Meg Energy, he was on the board of Hydro One, so he knows the challenges of the business. But the most important message is that now they have a friendly government in Ottawa that wants to do business. That means to deliver results and focused on results, not on processes and discussions how to get there. So from that perspective, I think the message and my interpretation of that message was that we have a government in Ottawa now that wants to see shovels in the ground on new projects, and they want to see them sooner rather than later. How exactly is that going to be done, when and how? It's still very early days, so we'll have to wait and see there. But they started dialogue already with the provinces. I'm sure there will be also some kind of dialogue with the private sector and the companies involved. I think some of the details that came out that were interesting and I think are important. One was that there's a lot of focus on the Pathway Initiative. So we talked about it for years now, that the Pathway Initiative of 6 companies here in Canada to sequester CO2 emissions and put them in the ground, so cut the emissions. That would be a big improvement for Canada overall to cut our emissions as a country. But it would also be a very big message to the world that Canadian energy is becoming cleaner and more responsible, and it would be a license for the industry to continue to grow. So I think that one is one project where there were the companies involved there. They've employed hundreds of people doing engineering on the project. So with some political will and discussions on some of the details that still need to be ironed out, I think we could see shovels in the ground to that project sooner rather than later. I think 2 other potential projects that could see some movement here next year or 2 would be LNG Canada Phase 2. So Phase 1 is complete. It's going to ramp up soon over this summer. It will become operational. Phase 2 hasn't been sanctioned, but the pipeline that connects the gas into the LNG facility on the BC coast, it has capacity with just some additional compression to double capacity on the pipeline, so that it would be a lot easier to implement than building a new pipe. And similarly, TMX that became operational last year, there's opportunity to expand that. So if it's true that this government is focused on delivering results quickly, I think those would be the priorities in the short term.
Okay, so given that backdrop, let's talk about the price of oil, because you say that it's all about OPEC right now. Why is that?
So when I think about oil, OPEC is obviously a big part of supply, and I have a chart here. And the way I think about OPEC is that there are different regimes, and sometimes OPEC is your friend as an investor in oil, and sometimes it's your foe, right? So if you look at this chart from 2000 to 2013, it was mostly a friend, and energy sector in the U.S. outperformed the S&P by 7% on average through that period. After 2014 through 2020, OPEC was mostly a foe to the energy markets, fighting for market share with US shale, and it was big underperformance relative to S&P. After COVID, there were 4 pretty good years for energy, and if you bought energy sector in 2000 and sold it at the end of 2024, on average for 4 years, you made 16% outperformance relative to S&P. Now, as we enter 2025, I put question marks there because year to date, energy is underperforming. And if you look at what OPEC is doing, they were talking about adding over 400,000 barrels of additional production that comes in May, or is supposed to come in May, then another 400 in June, and they will be meeting this weekend for July production. So there is a lot of uncertainty about what OPEC is doing and why they're increasing production at this point. I think there are two key issues from my perspective. One is that behind the scenes, there was a lot of tension within OPEC, and that tension hasn't been solved yet through discussions. And then maybe that's why Saudis and other members are increasing production and putting some pressure on the market. In particular, Kazakhstan has been singled out as an issue because there's a big field that is ramping up in Kazakhstan, adding over 300,000 barrels of new production this year. The problem there is that the Kazakhstan government, even though it's part of OPEC Plus, doesn't really have any control over production because they cannot order international companies like Chevron that operates that field to reduce production. And the energy minister in Kazakhstan came out several weeks ago and said that they also cannot shut down their old wells that they actually have control over because they wouldn't be able to restart them for technical reasons. So there is tension that is baking in there in expectations right now. And I think the other more concerning issue is that we had this roughly 4-year period when oil was about $80 mark. And in the past, we would talk about Saudis and other OPEC members they wanted that $80 plus oil for a number of reasons, but mostly to balance their budgets. It turns out that the $80 price environment was too good. It was too good for everybody, and everybody started growing a little bit. And in an environment where China is slowing down in terms of demand because their EV penetration is increasing, because they have gas-powered trucks on the roads, that becomes a problem. Sustainably, the whole market is growing a bit too fast, and you need to slow it down. And if that's the case, we probably need oil to come down here into 50s, and if market is too slow to adjust, maybe potentially even 40s. We'll see how it goes, but assuming there's no change in OPEC policy and there's no geopolitical crisis somewhere, that looks like that's the direction we're going.
Okay, let's talk a little bit about uranium, because we heard about the U.S. executive orders to boost nuclear power. Do you see any potential opportunities in that sector?
Absolutely. I think that uranium is quite interesting. And to your point, on Friday, Trump signed several executive orders, and the bottom line there is that they're supporting nuclear energy and uranium. And some of that is accelerating permitting and approvals for new projects, whether it's reactors or new mines. Also investing into a supply chain, not only to mine uranium, but also to process and fabricate the fuel in the United States. And also setting up a new funding mechanism for new reactors, providing cheaper loans to companies that want to build reactors. So all of that is positive. And in the long term, it means there will be more demand for uranium and more reactors in the United States. Uranium space is very slow moving. Building reactors takes years, 5 to 10 years on average, right? Building mines also takes similar time, if not longer. So it's not going to change supply and demand dynamic next year or next couple of years. But long-term trend is very clear and it's very positive. And I think US is just one of many countries that turned more positive on uranium in recent years. We've seen China being committed and building reactors and announcing new reactors year after year. So European countries move more pro-nuclear and either approving new reactors or having less opposition to nuclear as they had in the past. I think all of that is positive. There might be a slight negative at some point in the future where part of the logic behind the new policy in US was that US is too reliant on other countries. In particular, Russia is a big player in enrichment and processing of uranium. So if the idea is that they need to move away from Russia and other countries, at some point we might see some oversupply in some parts of the supply chain, but it's probably years away.
Okay, let's talk about gold, because we've seen gold rally this year. It hit a record high back in April. What are some of the factors driving the price of gold higher? And do you see this continuing going forward? Again,
there's a lot of things going on with gold. I think the short answer is yes. I think gold will continue to be high, maybe move higher. I'm not sure on that. But if you think about the reasons why gold is performing so well, People look for safety, and they're looking for safe haven assets, especially in this environment where volatility and uncertainty is really elevated, and policy uncertainty. There's a lot of things going on in the world with tariffs and whatnot. So people are looking for safety, but usually the safest and most liquid market in the past was U.S. Treasuries. Right now, a lot of investors who are long-term thinking, they're looking at the budget deficits in U.S., debt to GDP. They're thinking about it 10, 20 years out from now, and they're asking, where is this going to end, right? I think the last time I was here, I was talking about how U.S. Government was downgraded a couple times in the past, and since then we had another downgrade. So again, if you have this environment where U.S. not only addresses those structural issues with the budget deficit and sustainability of debt, but actually potentially adds on top of that with a new tax bill, people will be worried about even more downgrades in the future, right? And they need to diversify into something else that is safe, and there's not many options there, and definitely not of the same size and liquidity. So gold looks quite attractive from that perspective. And then the other perspective is that we have a trade war that is on pause but hasn't been really resolved yet. We don't know how it will end and how much inflation will come through that. On top of that, we have a tax bill, budget bill in US that if approved as it is, it would be quite stimulative as well in an environment where labor force is not growing as much as it used to in recent years post-COVID. So that could be quite inflationary as well. And inflationary environment, gold continues to perform just like other commodities.